Hi, student. Hello. Today we are going to talk about Chapter 15, Financial Statement Analysis. I have selected this question, PF 15-23A from your textbook at the end of the chapter question. We are going to calculate trend analysis, and we're going to calculate rate of return on common stock holders' equity. And rate of return is the ratio. Trend analysis is another tool of analysis. So they have given us three account: net sales revenue, net income, and ending common stockholder equity for 4 years: 2022, 2023, 2024, and 2025. The 2022 in this analysis would be used as a base year. It always considers at 100%. And we will calculate the changes that happened from 2022 to 2023, 2022 to 2024, and 2022 to 2025. So let's start our calculation. The first thing I'm going to use is share with you the formula. So the trend percentage is calculated using current year, the year that you are calculating, minus the base year divided by the base year. So in our case, the base year would always be 2022. So in this example, or in this question, base year is 2022 and is equal to 100%. That is the standard or tradition we have. So now I'm going to bring in this picture the number. So now we are going to calculate the trend change between 2022 and 2023. So we're using the formula that we have. The trend percentage would be, current year is 2023, so it's 644,000. Base year is 664,000, and we're going to divide this by base year of 664,000. If we take the calculator and we take 644,000 and we subtract 664,000, that will give us negative 20,000 divided by 664,000. So we divide the 20,000 and it's also multiplied by 100. So we get the percentage. So it's 20,000 divided by 664,000. So that will give us negative 0.03, and you multiply by 100, that will give you minus 3%. So basically what it's showing, that going from 2022 to 2023, we have a decrease. So the negative sign indicates decrease in net sales value. So all what we can say that this 644,000 is 97% of this number of 600 in the base year. So what we are saying, either we can say that it's a negative 3%, or in trend analysis, what we write conventionally is 97%. So the trend percent is 97% because there is a 3% decrease from the 100% we have in 2022. So let's calculate another trend percent for 2024. So this year, the current number, or the current year, is 708,000. We subtract the base year, which we have selected, 664,000, and we're going to divide this by 664,000. So 708,000 minus 664,000, that gave us 44,000 divided by 664. So we divide this number by 664. That gave us 0.062. 0.066 multiply by 100. That will give us 6.62, sorry, 6.62, 6 or 6.66%. So we can say that we have an increase from 22 to 24. When we compare the data from 2024 to 2022, we have a 6.6% increase. Let's do one more. Let's do the one from 2022 to 2025. So that will be, the current year would be 766. As you can see there, 766,000. And the base year is 664. And divided by 664,000. So 766 minus 664, that will give you 102,000 divided by 664,000 multiply by 100. So that will give you, divided by 664, it will give you 15.36%. Multiplied by 100 is 15.36%. So what we can say that in 2022, so I'm going to write the trend analysis here, and I'm going to show you for the first. So that's the net sales revenue. And the year is 2025, 2024, 2023, and 2022. So that number was 664,000, and we call it 100%. This number was 644,000. There was a 3% decrease, so it's not 100%, it's now 97%. The 2024 was 6.6%. So we can say that this number was 708,000. So we can say that this number is 106.6%. So this 664, which was 100%, becomes 708,000. So there is an increase of 6.6%, or this number is bigger than this number by 106.6%. 2025 was 766,000. This number was 15.36 that we have calculated. So this number would be 115.36%. So anybody is looking at this data can say this: if this is our base year, we have a decrease of 3% in 23. We have an increase of 6.6% compared to 2022, and a 15.36% compared to 2022. And you can calculate the rest of the two other, net income and ending stockholder equity. Now we have to calculate return on common stock. So I'm gonna jump back to part 2 of this. This one was part 1 of for the trend analysis, and you can do the rest of the 2 accounts yourself. It's pretty easy. So now we're calculating the rate of return on common stockholder equity. SE common stock. The formula is net income minus preferred dividend divided by average common stock holders equity. All right, so in this case, for 2022 to 2023, we have a net income that is given to us. So the net income for 2023 is given to us as $36,000. So we put the $36,000 minus preferred dividend. Now this question does not talk about whether this company has any preferred stock or they have paid any preferred dividend. If the question does not talk about, you just put simply a 0 in it and divide by average stockholders equity. Now how would you calculate the average? Because you have been given a stockholder equity from the beginning of the year or the end of the 2022 is the same thing, is 296 and 326. So you're just going to take 326,000 plus 296,000 and you divide by both with a 2. So that will give you 36,000, and the average of these two numbers, 326 plus 296 divided by 2 is give you $311,000. So when you take 36 divided by 311, that will give you a number for 0.115, or you multiply by 100 is 11.5%. Now, the question some of you may be asking, if we are not using preferred dividend, why did you have? So this is a standard formula, because a lot of companies have preferred stock, but a lot of companies don't have a preferred stock. When they don't have a preferred stock, they don't have any preferred dividend. So you just put a 0 there. Another thing, why we are subtracting preferred dividend? Because we are calculating the rate of return on common stockholders' equity. The common stockholders wants to know how much return they are getting on their investment. So suppose that you are a stockholder in this company and you invested $100 and you are getting 11.5% return. So basically for every $100 that you have invested in this company as a common stockholder, you are getting back 11.5% or $11.50. Now, as a common stockholder, you will have to decide whether this return is good or bad for you. And how would you decide? For example, when you invest in this firm, you expect that you will receive $15 for every $100 you invest in it. That was your target. Now this is below your target. So would you continue to stay in this company, or would you like to pull up your investment and you want to go somewhere that can provide you a 15% return? So that's the idea behind calculating the rate of return on common stockholder equity. A common stockholder wants to know how much return I am receiving on the investment that I have made. Please let me know if you have any question, and if you want me to make any more video for this particular chapter, please let me know. Again, thank you very much for watching, and I hope to see you in another video.